So, you've launched your startup, the energy is absolutely electric, right? The product is coming together, you're running on pure adrenaline. But listen, underneath all that excitement, there's a hidden danger that trips up almost every single founder. And it has nothing to do with your product or the market. It's all about the numbers. So let's break down the 7 critical finance mistakes that can quietly sink a startup before it ever gets a chance to swim.
Get this, an incredible 95% of founders make the financial mistakes we're about to cover. I mean, just let that sink in for a second. The odds are, if you don't have a plan, you're on a path to making them too. But the ones who manage to avoid them, well, they're 3 times more likely to survive their first 2 years.
You know, this quote really gets to the heart of the whole issue. It's a brutal truth, but it's one we have to face. As founders, we obsess over product-market fit, but it's often the quiet, creeping financial mismanagement that actually sinks the ship. All right, so here's how we're going to tackle this. We're going to break down the 7 most common mistakes, and we'll group them into 3 key areas. First up is what we call the later problem. Then we'll talk about the financial fog that just clouds your judgment. And finally, the systems failures that create total chaos. And don't worry, after all that, we'll lay out a clear path forward. Okay, let's dive right into the single most common mistake of them all. This isn't about software or spreadsheets. It's a mindset problem that infects pretty much every early-stage team, treating finance as a problem for later.
And look, I get it. I really do. You are laser-focused on building and shipping your product. Finance feels like this annoying distraction, like some kind of corporate busywork you can just put off until you're bigger. But I'm telling you, that kind of thinking is a trap.
Just picture this for a second. An investor who's really interested asks for your numbers. So you log into your bank account and you're just staring at 6 months of complete chaos. Personal expenses are mixed in with business costs. There are no clear records. It's a mess. That moment of sheer panic can kill a deal right on the spot. The fix, believe it or not, is surprisingly simple. But, and this is the key part, it has to happen from day one. You don't need some super complex accounting software to start. A basic system, even a spreadsheet, to track what comes in, what goes out, and how long your money's going to last. That's all it takes to avoid that panic down the road.
Now, putting off the basics leads us directly into our next set of mistakes, which we can group together as living in a financial fog. This is what happens when you don't have the clarity you need to make smart decisions. Basically, you're flying blind.
So you're talking to an investor, and they hit you with this question. This is like the most basic test of whether you know what's going on with your company's money. Answering with, maybe 6 months? That is an instant red flag. You need to know this number cold. And the key to knowing your runway is knowing your burn rate. It's really simple. It's just how much cash you're burning through every month. So, for example, if you've got $100,000 in the bank and you're spending $10,000 more than you make each month, your burn rate is 10 grand and your runway is 10 months. Simple. But without tracking this, you can't possibly plan your hiring, your marketing, or your next fundraising round. And that's the whole point. Having a real-time view of your burn rate, well, it transforms everything. You go from just guessing about things to actually making strategic decisions based on hard data about the health of your company. It's a total game changer.
All right, mistake number 3. This one's a classic, and it is so easy to fall into this trap where that line between your money and the company's money just starts to get really blurry.
Seriously, it always starts innocently. A coffee here, a software subscription there. You put it on your personal card and promise yourself you'll expense it later. But then you fast forward a few months, and your accounts are this tangled spaghetti-like mess. It makes tax time an absolute nightmare, and figuring out if you're even profitable, almost impossible. This next mistake is a close cousin to the last one. Your bank statement is just a long list of transactions, right? So was that $500 charge for a new software tool, or was it for marketing ads? When you wait months to categorize everything, you just forget. And the outcome is totally predictable. A frantic scramble in April to piece it all together before the tax deadline. And even worse, you end up missing out on thousands of dollars in legitimate business deductions just because you don't have the records to prove what you spent. You know that $2,000 laptop you bought back in June? Without a category, it's just a number, and that's a lost deduction. Okay, let's move on to our final cluster of mistakes. These are all about systems failure. These are the problems that pop up when there's no central, shared understanding of the company's finances, and it ends up affecting the entire team. This says it all, doesn't it? This is mistake number 5, poor collaboration. When all the financial info is stuck in one person's head, or it's scattered across a dozen different spreadsheets, chaos is inevitable. I mean, if you think you have 15K in the bank but your co-founder thinks it's 20K, you're going to make conflicting and potentially disastrous decisions.
The next mistake is a real double-edged sword: payments. On one side, you've got unpaid invoices from your clients, which just starve your cash flow. And on the other side, you have forgotten payments to your vendors, which damages your reputation and your most important partnerships. Both are deadly.
And all of this brings us to the final mistake, which is really the culmination of all the others. Without clear financial data, your biggest decisions are nothing more than gut feel gambles. But with data, they become strategic choices.
I mean, think about it. How can you possibly decide whether to invest your next dollar in hiring a new engineer or launching a new marketing campaign? Without any historical spending data to look at, you're just guessing. You're throwing darts in the dark and hoping one hits the board.
So, after going through all these potential disasters, what's the path forward? Well, the good news is there's a really clear pattern to the solutions. It's actually not as complicated as it seems.
Here's the key takeaway. Every single one of these mistakes is preventable. You do not need a PhD in finance to get this right. Success really just comes down to two things: developing good habits from day one and using the right tools that are actually designed for early-stage teams.
Ultimately, it really comes down to this. You are pouring your heart, your soul, your life into building something amazing. Its success or failure shouldn't be left to chance, and it shouldn't depend on financial guesswork. You've got to take control of the numbers early so you can focus on building your vision.
And that leaves us with one last question for you to think about. When you look at your own company, is its financial future being built on a foundation of solid strategy, or is it resting on pure guesswork? The choice is yours.